Good morning, friends. Welcome to the SBI Securities morning podcast. In today's podcast, we would be discussing about what to expect in Nifty and Bank Nifty from here on, along with the key levels for both the indices. We'll also be discussing on key sectors and stocks that we should focus for the day and the next few trading sessions. Ahead of the FOMC policy, we saw Nifty, Bank Nifty exhibiting sluggish and closed weaker by 0.4-0.5%, both forming a doji on their respective daily charts. Post the FOMC policy statement, which has been dovish in nature, with the Fed maintaining a pause on the key interest rates and also hinting that there may not be any more rate hikes in the near future. The dollar index is still sustaining around 106 levels, but the US 10-year bond yields has cooled off to 4.7, which is a big positive. Coming to index levels going forward post the expected gap up opening, support zone is likely to be around 19,040, 19,050, and till 19,040 holds, we can witness a rebound in Nifty up to 19,210, 19,230 zone. Below 19,040, the index can witness a further sell-off up to 18,970, 18,950 levels. A major resistance zone could be witnessed around 19,230, 19,250 zone and needs to be watched carefully. If Nifty sustains above this zone, then further short covering up to 19,330, 19,350 cannot be ruled out. Looking at the OI data on the weekly series, significant OI put has been built up at 19,000, 18,900 strikes, while on the call front 19,100, 19,200 witnessed considerable open interest addition. Overall range for the day could be 19,030 on the downside and 19,230 on the upside. Coming to Bank Nifty traded sideways for most of the day, forming a doji on the daily charts, which was indicative of indecision going into the Fed meeting. Going forward, post the positive opening, 42,700, 42,750 would be a support zone, while the resistance zone would be 42,970, 43,000 zone. Bank Nifty needs to sustain above 43,030 for any major reversal up move up to 43,300, 43,370 levels. While below 42,700, index could retest the levels of 42,400, 42,450 on the downside. Let us now see sectors and stocks that are looking positive, keeping the short-term perspective in mind. From a short-term perspective, realty, auto, CPSE sectors are looking positive, as these indices are strongly placed above their 20 EMA on the daily charts. From a short-term to medium-term perspective, stocks like Oberoi Realty, Trent, Sun TV, Birlasoft, Godrej Properties, MCX, as well as CDSL looks well placed on the charts. If we observe the FI data, FI is sold to the tune of 1,800 crores, while DI is bought to the tune of 1,600 crores in the cash market yesterday. FI's long-short ratio for index futures remains weak at 15%, as they added around 4,800 index futures short on a net basis. In stock futures side, FIs have sold to the tune of 18,000 contracts, while on the options front, FIs have bought almost 2 lakh contracts and 1 lakh 60 contracts on the put side. Just to summarize, key support for Nifty being 19,020, 19,050 and resistance is seen at 19,210, 19,230 levels, while for Bank Nifty support would be 42,650, 42,700 levels and resistance would be around 42,950, 43,000 mark. Above 43,000, Bank Nifty can move towards 43,400, 43,500 levels on the upside. So friends, that's all for today. Thank you for regularly listening to our podcast and wishing you all an energetic day ahead. Do tune in tomorrow for more market updates and insights. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.